Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ross Kay. He's a home ownership consultant out of thewealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks for having me back, Jim, and glad to hear that your voice is a little bit better this week.
Yes, the nasty colds go around this time of year. They always tell you to get a flu shot, but they also tell you don't get a flu shot if you're ill. So when the hell do you get one? Ross, exactly. Your comments on the release to Sold Data garnered a response from a few of our listeners who, while agreeing they get much information and insight from you that you can't find anywhere else, they questioned what you said on sold prices. Can you give us a little more on what your thoughts are on that?
Yeah, I had some of my Twitter followers made a comment about that too. Okay, so sold prices. So first of all, your listeners are going to be a little bit misunderstanding of what the Competition Bureau is saying. What they're saying is they can release the direction was for the Toronto Real Estate Board to start feeding the data from the Real Estate Board to agents that included sold prices. Now, that feed does not exist now. They'll have to create a new part of the feed technology that will allow that to be released. Not really complicated. Might cost them $10,000. No real big deal for a big real estate board. So that portion of the misunderstanding of the Competition Bureau is taken care of right there. But what won't be released is sold prices of pending sales, because sold prices on pending sales, which is what happens when your home sells, there's a period between the night of the offer and the day where the new family moves into your house. So that period of time, those selling prices will not be released to the public. And that is not what this direction from the Competition Bureau had. That information, generally speaking, is the most up-to-date and relevant. You're still going to have to get in contact with the realtor to do that. So the only thing that will be released sometime in the future, whether they go back and they argue this case again or not, because of the misunderstanding what's out there about housing markets, would be sold prices on closed sales. Now, this information is already available at your land titles office, and for people who live in British Columbia, you can go on the eValue website, and that is updated quickly enough. What is different, though, is how that information is aggregated. So, although you can go onto the eValue website and anonymously find out what a home may have sold for, if you know that it's sold and it's closed, and that now has been uploaded to the eValue website, you can't download mass data from the eValue website. That is not available in a big data format. It's not available to download. So what that does is it makes it technically impossible for someone with nefarious intentions on the use of that information to go about using it. But the information is still available. So would it be easier to get it from a real estate website somewhere that a real estate agent owns? Yes, that it may be easier to do it that way. But there are also going to be constraints placed on that realtor from provincial trading legislation, which means you're not going to have unhindered access to what everybody in your neighborhood has sold their house for. Again, which I believe is not something that should happen. Your listeners need to also understand that the lawyers of the buyers and the sellers will insist upon a change to both the listing contract and the buyer representation agreement, which are the two contracts that you sign with real estate sales representative brokerages in order to work with them and use their services. The lawyers for buyers and sellers, not the real estate boards, will be instructing their clients to stroke out specific clauses in both, or revise them, in both the listing agreement and the buyer representation agreement. Because those listing agreements and buyer representation agreements already have a clause in them directing about sold prices. Those clauses already exist. They exist in every real estate board across Canada. Those clauses have been revised over the last 40 years, dozens of times. And they've, across the country, it will have been hundreds and hundreds of times that they've been revised as each real estate board gets their own legal counsel from their lawyers in what they can and cannot do with that information. But in this case, what will happen is, because TREB wouldn't be able to do it, because then the Competition Bureau would say you're trying to circumvent our ruling, lawyers for buyers and lawyers for sellers who have a legal requirement to represent their clients will tell clients to stroke those clauses out. When those clauses are stroked out, that information will no longer be available. So, that's another reason why sold prices will probably not be open access. Closed sale prices, yes, because those are already readily available. But pending sold prices, no. Now, my final comment. My final comment is this. If your listeners go to the BNN website, click the drop-down menu for real estate, you'll see that Greg Bunnell last week interviewed redpin.ca, which is actually called the Red Pin Brokerage. The particular guy that's on the show called himself the CEO of Red Pin, which really means he's the broker or owner of Red Pin, and he's the type of guy who is willing to break provincial trading legislation in order to benefit his own company. In other words, he has a legal obligation under the Real Estate and Business Brokers Act in Ontario to ensure he's called broker of record for the Red Pin Brokerage. Provincial regulators require that so that the consumer isn't fooled by someone pretending to be someone that they're not. And when you quit being licensed, you no longer can call yourself a brokerage, and you can no longer call yourself a broker of record. But this fellow nevertheless was on BNN spouting off about this Competition Bureau discussion. Your listeners need to listen, because about three quarters of the way into his interview, he made the mistake, the rarest of slips, where he mentioned capital. He mentioned that the availability of sold data would make capital being infused into his company more easily done. Now, in the United States, there's a firm called Redfin. Redfin is a discount real estate brokerage under the disguise that it's something new. It's not. It's been around. Similar models have been around for 40 years. They've been around forever. They're available all over Canada. In Canada, you can list your house for $1. So, I mean, that's as discount as you can get. But this company has conned investors in the United States to the tune of $1 billion. They have returned $1 billion via IPOs. The Redfin hopes to do the same thing in Canada. Now, or the Redpin. The Redfin's in the States, Redpin's in Canada. Now, the Redpin is confused, because what the Redpin doesn't understand is that what they want to do, they can't legally do anyways. Now, the reason they can't do it is because if you listen to that interview, you'll notice he brings up the word algorithm. He states that our algorithms allow us to be able to use those sold prices to forecast, to tell people what their own home is worth, or what any home is worth. Now, if this fellow was right, he could go down to the United States of America right now and enter the Zillow prize, because Zillow.com in the United States, which has threatened to come to Canada, they have a prize where they're offering $1 million if you can create a better algorithm than they have for coming up with home prices. Why? Because they don't have one. They have a little tiny plus and minus divided by this number that they come up with that it is not able to move with the market. So they don't understand how a housing market functions. That means Zillow's estimates are dangerous in the United States of America, and people are making bad financial decisions based on these estimates all over the place. There have been court cases, lawsuits already in the United States over this issue, because their algorithms don't work. You can't create an algorithm when you don't understand how a market functions. You can't create an algorithm unless that algorithm can turn as a leading indicator. It has leading indicators in the algorithm that will turn prices negative when they're forecasting. None of these exist. The only people who are able to, as your listeners know, that can time the market, who states that they can time the market, is my firm. That's because we have 40 years of studying the housing market, and we know how the market works, and we know what inputs or metrics to look at that allows our algorithms to move forward. Now, our algorithms are not super complicated, but what is complicated are the metrics we use to measure the market. And sold prices people are not going to give you those metrics. When I look at our professional dashboard, so Ross K Realty Consultants, our professional dashboard that professionals use, okay, this is not the average consumer, but the exact same technology and metrics that we use on those professional dashboards are fueled into the wealthy homeowners forecasting models. There are 25 metrics that we use on those professional dashboards. So professional users with my consulting firm, they get access to 25 different metrics about every housing market that we record. Now, if your listeners want to go somewhere and find out what I'm talking about, they can go ahead and try to find someone else who produces days of demand. You can find lots of places that will give you the faulty months of inventory ratio, but you will never find anyone who measures the buyer side of the equation, which we call days of demand, days owned between trades. You cannot find even a definition of days owned between trades except with my firm. Days owned between trades allows us to calculate the net worth of virtually anyone. So some of the people who were talking about me not wanting to suggesting this sold in for, oh, you can't come up with the guy's net worth if you only know the selling price. Oh, yes, I can. I can calculate based on MLS data where they previously lived, what they moved from, how much equity they were carrying with them when they moved forward, how long they have owned their existing home, how much mortgage they had at the time of the purchase, how much of that mortgage debt would have paid down, and how much their own home prices increased in value. I'll be within plus or minus 5% of anybody what their net worth is. It's why the website's Wealthstimates is out there. So it's another program where these algorithms are used to calculate people's net worth. You won't find days owned between trades because no one knows how to calculate it. We do. Buyers that are ready, willing, and able to buy. We call them RWAs. RWAs will tell you exactly how many buyers are in the marketplace right now who are ready to buy a home. They're willing to buy a home and they're able to buy it. Now, able means they've already sold their existing home. Willing means they've made enough equity in their previous home to be able to buy it. And ready means that they've been in the market searching for a long enough period of time that they're ready to take action when that property comes available. We calculate those numbers for both nationally, provincially, and for the large metropolitan areas in Canada. You will not find those metrics anywhere else. Links in the sales chain, or LISC as we call it, tells you how many sales happen after the first-time buyer enters the market and buys a first-time home. Because that first-time home buyer then goes out, the owner of the home the first-time buyer bought goes out and they buy another home. The owner of that home goes out and buys another home. The owner of that home goes out and buys another home. That's what the sales chain is. The sales chain is always moving, and it moves in a trading cycle, and it dictates what's going to happen to house prices. It's why their algorithms don't work, because they don't know what the heck I'm talking about. We have 25 different metrics. On price alone, Jim, price alone, we have the purchase price index, we have the real property price index, we have new property price index, we have the transactional property price index, and we have the real home value index. Those are 5 metrics just on price. None of them have sold prices in them. None of them are related to what the selling prices are. That's why we call them purchase prices, because we know what the market does. So this old sold information, in the end, the reason why I don't believe it should be available is twofold. One, the privacy of the people who bought or sold a home for a certain price should not be available for download by anyone. I have no problem with you getting that information from someone who has signed a written agreement, who is subject to the Privacy Commissioner's Office, who is subject to provincial trading legislation, who can lose their income if they do something wrong with that information. I have no problem with you getting that information from those people. But to give all the moving companies in Vancouver a list of homes that sold last week so they can start telemarketing all those people, I have a problem. And that's what happens when we're talking about open access to MLS data, because the sold data is worthless without the rest of the listing information. Someone can tell you that a whole home sold for $50,000 more than the exact same house that was across the street. Unless you know that the one that sold for $50,000 more had granite countertops, all 3 bathrooms had been redone, the new hardwood floors had been installed in the whole house, the furnace, an HVAC system had been replaced in the last 2 years, and maybe the pool in the backyard that they don't want to talk about was installed. That sold price is useless. That's why you hire an appraiser, because the appraiser can give you an idea what the price is. So on all of those accounts, it's why I'm saying that pending sale prices should never be released to the public. My bigger concern is the talk of algorithms, the talk of real estate tech companies who got a real estate brokerage license for $5,000, joined 5 or 6 different real estate boards across Canada for another $5,000, and for $10,000 believes they're going to get access to everybody's personal information who's bought and sold a home over the last 30 years. And then from that, they're going to create algorithms to totally deceive the public, because they do not have a revenue stream model based on their current business platforms. There is not one successful brokerage who lobbied the Toronto Real Estate Board for access to sold data. Every single one of the people who appeared as expert witnesses have less than have a minimum 2 agents working at their firm for every one listing that they have. Some firms have 40 agents in one listing. They're failed brokerages. They're brokerages who have lived by myths and only hope to take your personal information, selling prices of the houses, and use it for their own personal gain. This is not a public access issue. That's my opinion. It's not going to change, because I know what damage can be done with real estate data.
We'll have more with Ross Kay right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're talking with Ross Kay. Ross, we've heard a lot of talk about people who want to be able to allow the RRSPs of parents to be used for their children to buy their first home. What's your thoughts on that?
Great question. So, of course, who's lobbying for this? It's the real estate trade organizations who make commission from consumers, and it's builders who make money by selling houses, and the higher the profit margins they can make via higher selling prices, the quicker and the more money that they get in their own pockets. The RSP home buyer plan that was first put in and currently exists about allowing first-time buyers to withdraw money from their RRSP to use for a down payment on a house was flawed on the day it was launched. It was a ridiculously bad policy that my own family fought against when we were members of organized real estate. So we were part of the discussion group when the Canadian Real Estate Association began lobbying for that. We explained to people that what the flaw is in that type of a system is the RRSP funds will not be repaid. When you're borrowing money at 32 to 39% gross debt service ratio for mortgage and taxes and a little tiny part of your utility bill, you will not have the money left over to take care of your house, as normal homeowners like to do, and repay those RRSP funds. Everybody laughed at us. They said it wouldn't happen. Oh, you guys are just trying to argue against us again. Well, as it turns out, the last time that the CRA released information about RRSP repayment plans, home buyers plans, RRSP home buyer plans were for the replacement funds, was like 70% of first-time buyers who took money out of their RRSPs didn't return it. 70%. Now, there hasn't even been any new numbers released on that, I believe, in 3 or 4 years, which kind of tells you that what's up. Why wouldn't they release it? If people were actually repaying these monies as they're responsible to do, why hasn't the government come out and bragged about it? Well, they haven't. Now, I guess you could do a Freedom of Information request. We don't need to do it because we can't see the RSP repayments possible for many of the people that utilized it. The RSP, any RSP use to purchase a home simply means that the person who's buying the home, it really isn't qualified to buy it. They're either buying too much home, in other words, they're not willing to work their way up the property ladder. They want to jump a couple of rungs off the start to get a head start on moving up the property ladder. Or there's simply people who are not ready right now to buy a home because their own personal finances are not at a point where they are for the market they want to buy in. Because I can tell you, if you make minimum wage, dual minimum wage, and you live in Canada, there are many cities across this country, towns across this country, where even in Ontario, my hometown, my home province here, where you can move and own a home with 2 incomes of minimum wage. And when our minimum wage goes up to $14 an hour, it's like it's a jackpot for those people if you choose to live in those cities. RRSPs are not going to help people in Vancouver start the property ladder. There is going to be the correction that is ongoing in Vancouver needs to fully work its way out. The correction needs to be allowed to happen. If you were to allow parents to use their RRSP money, all you're going to do is prolong the inevitable. You may stave off a correction for a while, but because you're going to allow a few more first-time buyers to enter the market, which will keep your sales chain going. But it is already too outrageous in terms of pricing that it's going to be sustainable. Unless you're ultra wealthy or you got into the property ladder in Vancouver 35 years ago, you are not going to be able to navigate it. You're going to have to move out into the suburbs and work your way back in. Now, if people think that they have a right to own properties in the most expensive piece of real estate in the country, I'm sorry, that's just not a reality. Now, it's your government's fault that this has happened. It's your government's fault that this has happened. They have not built enough housing stock in British Columbia to satisfy the needs, specifically in the Greater Vancouver area. They have not built enough. Not even close. Because if they did, you wouldn't have the house prices that you're looking at today. We're looking at house prices even after the drop that we've already recorded. So again, I don't care what anybody else says out there. We know that your housing market has fully recorded the 31% drop in price. Now, only certain categories of houses are showing that right now. But it is inevitable, folks. Inevitable. It will happen. There's a couple reasons, there's a couple more things to discuss on that, Jim. But I think I'll leave it here today. If you have any mothers and fathers out there who are thinking that they want to loan their money from an RRSP or their pension plan so that their kids can buy a home, unless your kids are able to pay you 3.52% interest annually on that money, and you're willing to have a lawyer oversee the process. So if the kids don't make a payment, the lawyer will be the one who acts on it, not you. You're going to have no say in the matter. The lawyer is going to say, no, it's my legal obligation. You have to pay that money to your parent. You have to pay that money on the mortgage, just like it's the bank. Then you shouldn't be doing it. Your kids are not in a position to be able to buy. On the flip side, if you are a millennial and you are wanting to work your way up the property ladder and you want to get started, there are many great ways to get started that you're not seeing from organized real estate, the banks, or anybody else, because they want you to do it now. What I'm saying is you need a strategy. It may take you a couple of years to get there, but it's nothing like these crazy comments about the average millennial has to save for 20 years to save up a down payment. That's the craziest thing I've ever heard of. I mean, yeah, right. There are strategies that are available for that. So if some parents out there are thinking this is a good idea, what I'm going to tell you is this. There's a better gift that you can give your kids to get them started in the property ladder. That's some advice that's truthful, honest, backed by 40 years of market intelligence. That's the best gift that you could give.
We'll have more from Ross Kay right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ross Kay. Ross made headlines last week that home prices were up 14% over year in November for Vancouver. That appears to be opposite to what you've been claiming. So who should people believe?
Who should people believe? Well, I'm going to tell your listeners this. Don't believe me until January the 15th. And then when the Canadian Real Estate Association comes out with their average sales price change in Vancouver for 2017, the entire year, and they tell you that house prices have only changed 1%, then you know who you should have been believing. Because the universal metric used to determine house prices anywhere in the world today is average selling price. Now, I know everybody on this that listens here understands that I don't believe in average selling price. I tell you it's a buyer side metric. It's actually called the average purchase price, which is what it was created under. But regardless, you are going to hear that home prices in Vancouver have increased 1% this year, under 1% this year. They might be able to fudge numbers to get 1.2%, but never a 14%. It's no different than the people in Toronto who heard that housing prices went up 35% this year. When we're looking at the Toronto price, earlier this year, we were telling the way that our forecasting models work, we were calculating about a 12% year-over-year bragging rights for the local real estate board. And when I'm looking at it here today, trying to look at where they're headed in Toronto, they're heading for about a 12.6% year-over-year gain for the year. That's how precise our forecasting modeling works. Prices did not increase 30%. What happens is the crappiest homes in the market were selling for 50% more than what they should have been selling for because of the ignorance and incompetence of real estate agents. Total incompetence, people. The 30% prices, which inferred a nice house would have gained a 30% gain, didn't happen because those houses weren't trading hands, because the people who owned those houses had already withdrawn from the market. We are working on a way of trying to explain how everybody gets conned with benchmark price, which simply reproduces average selling price. Anybody who questions me, go ahead, just graph it out on a chart, guys. Make sure that you adjust for the dates for when the benchmark was 100. Use the average selling price for when that date was, and then move it back 4 months. And you're going to see that they align. In some parts of the country, it's a 100% alignment. In Vancouver, it's a little bit more off. But anyways, it's going to be so close. You're going to say, "Oh, I understand what Ross is saying now," because they're all measuring the exact same thing. They're all using selling prices. Selling prices don't matter, people. Selling prices move in a market. I encourage all of your listeners to do a spreadsheet. People who question this, who are looking for the answers, who are looking to say, is this guy really telling us the truth? How come he's telling us this and everybody else is telling us differently? Do a spreadsheet, label it January, February, March through December. And then down in the column before January, write 10, 20, 30, 40, 50, 60, 70, 80, 90, 110, 120 down that column. And we'll say that those are the selling prices of peanuts as we go through, as in 12 different months. Meanwhile, at the top columns, we've got January, February, March, April, May, because it's each month we're going to change what those 12 sets of peanuts sell for. In January, pretend only the peanuts that were $10 are now selling for $11. So somebody out there wanted to buy the $10 bag of peanuts, and they said, well, I won't sell it for $10, but I'll sell it to you for $11. Somebody bought it. All the other bags of peanuts, the $20, $30, $40, $50, $60, $70, all the way down to $120, they all stayed the same. Figure out the average selling price of those peanuts. In February, the guy who got $11 for his bag of peanuts, he made $1. He decides that he wants a bigger bag of peanuts, so he's going to buy the $20 bag. So in February, he's going to buy the $20 bag of peanuts. He's going to spend the $11 he got for his bag. He's going to give the guy the exact same $10 difference between his $10 bag and his $20 bag. So now we're at $21. And on top of that, he's going to give an extra $1 of his own money the same way that the guy who bought his bag of peanuts paid an extra $1 to him. So now he's going to spend $22 buying a $20 bag of peanuts. And in February, the only bag of peanuts that sold was that $20 bag, but it sold for $22. Everyone else sold for the 10, 30, 40, 50, 60, 70 for the whole time. Add them all up and do your average. I want you to do that for all 12 months of the year. So as you move forward, the $30 bag sells for $33. The next month, the $40 bag sells for $44. The next month, the $50 bag sells for $55. So on and so forth until the last bag of peanuts that was worth $120 in November sells for $132 in December. But it's the only bag of peanuts that went up in price. 10, 20, 30, 40, 50, 60, 70, 80, 90, 100, 110 all stayed the same. The only bag of peanuts that changed in price was the one that was bought in December, and it went from $120 to $132 because that guy put the last extra dollar into the pot. Add them all up and divide the average selling price. You're going to find that in January, the average selling price increased 0.13%. In February, it jumped. Even though there was only one bag of peanuts, and it only sold for 10% more, the average price increased 0.26%. In March, the $30 bag increased in 10% because it sold for $33, but the average selling price of all 12 bags of peanuts increased to 0.38%. By the time we get to December, the average selling price of the bags of peanuts, even though only one bag of peanuts sold, it happened to be the most expensive bag and the last one in the sales chain, it recorded a 1.54% average increase for all bags of peanuts sold that month.
Ross, we have very expensive bags of peanuts here in Vancouver. Very expensive. Thank you so much for chatting with us.
Thanks a lot, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HoweStreet.com Radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at HoweStreet. If you have any questions for Ross or our other guests, you can send them to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com Radio is a production of HoweStreet Media Incorporated.